Hey, what's up YouTube? Welcome back to another series of my YouTube video. So today I'm going to show you what liquidity is in price action and where to spot liquidity when you are trading a price action, like more of break and retest pattern. I have something like that. I'm going to show you how to spot liquidity grab and how to know when to buy and how to know when to sell. So as we all know, market is always doing what? It's always creating a series of higher high, higher low, higher high, higher low, subsequently like that, continuously like this. You feel me? So and before it goes, this is just a like this is an illustration. It's always not like this on the main chart. It's not always like this on the real chart live market. So you always have something like this. So let's say this is a impulse movement. We have a impulse movement. So an impulse movement is more the market rallies up without giving any any side of any pattern or something like that. So let me just illustrate it. Let me just label it right here. We have an impulse movement. Impulse movement. And then we also have retracement, or yes, retracement. We have the retracement. So impulse movement is when the market moves significantly right from this zone down to up to this zone. So it moved rapidly like this, and it created this high right here. Let me use this one. It created this high, or let me just use this one to mark it out. It created this high right here. It created this high right here. So this very zone is where first of all, let me define what liquidity is. So liquidity is basically where retail traders like you and I are putting our stop loss, or putting their stop loss. Is where people are putting their stop loss. So a lot of people that have entered from here have kept their stop loss above the market structure, like around this zone. And this zone is what is known as liquidity zone. And in this type of market scenario now, this is an external liquidity. Now when the market is chasing back to the zone that caused the breakout, like the retracement, it always takes out liquidity from the internal liquidity before it moves to before you continue its overall movement, bullish movement. So in this scenario now, this is a bullish market structure. So it always comes to take out the internal liquidity before it continue its overall bullish movement, and then it will also take out this external liquidity that has been created here. So basically what liquidity is simply where people are putting their stop loss, is that in the recent higher high or higher low. So this is where their liquidity is, on when people are taking a sell, and this is where liquidity is where people are taking a buy. You feel me? So it's basically where people are putting their stop loss in the market or in a particular zone. You feel me? So when the market is moving like this, let me just delete this one let me just draw on that one rather. So when the market is trending to the upside, we always want to have something like this. Always have something like this before. This is all the sorry, let me delete this one. This is all the impulse movement. All this movement is is known as impulse. So the market is just going like this, impulse movement, and when it started coming back, it always has this pattern. Note, when the market is retracing, always have pattern. Always create a pattern for you. You will always spot it in the market. So the retracement is always having a pattern. Whereas this impulse movement just like moves significantly. You feel me? I don't know why I'm finding it difficult to pronounce that word. So let me explain for you guys in the main chart in the real life market. I want to explain this thing as best as I can. So you can see this is the price action, mainly break and retest pattern. So the market is creating a series of higher high, higher low, higher low, higher low. And what I said is that the places where people are putting their stop losses is what is known as what liquidity. So people that have sold around here with their stop loss right above that zone, and their take profits, will be around this zone. Why is this so broad? So people are putting their take profit right around that zone. You feel me? So this zone is known as what? A liquidity zone, and this is what? An external liquidity zone. Whereas this type of zone is what is known as what? Internal liquidity. So let me delete this one. Since we are in a bullish market structure, creating a series of higher high, higher low. So now what this market does is, as you can see, the moment it created this impulse movement, you can see there's no sign of patterns right here, except you want to zoom out to the lower time frame and then see this mini pattern. But overall, this bullish, what is it called, this impulse movement did not create like a very strong pattern for you to see. But that's why it's known as the impulse movement. And then this one also is what is known as what? The retracement. So when you created this retracement, there's something I always plot out when it comes to this retracement. And you can see this trend line. You created this what is it called? Is this some sort of bullish flag? Some sort of bullish flag. You created this sort of bullish flag before you continue to the overall bullish market, and you can see again you created this massive move to the upside before it started retracing continuously like that. So what I want to do in this kind of market structure is that I want to plot out a liquidity grab before going into the market. So this zone is where a lot of people would have like entered this market this very soon when this market started going to the upside, because this is what a liquidity zone also. So a lot of people would have entered right around this zone and putting their stop loss above the candlestick like that, and then their target will be around this zone. You feel me? So what happened next is that this very zone was a liquidity grab, and then it retraces back and then hit their stop loss and continue. So this kind of zone is what is known as where the people are putting their stop losses. You feel me? Internal liquidity. And whereas this one is what known as, this very zone is known as external liquidity. And what happened next is that you can see market come straight up and take it out. You can see what market comes into it and take it out. And then when you take it out, it moves significantly to the upside, and still what breaks out after breaking out of this zone, still reaches back to this zone, and then you see a lot of people would have entered from this zone as well. But what happened is that we got taken out like this liquidity zone, because a lot of people are putting their stop loss target around this zone as well, this very zone. So what happened next is that the market comes into it, trigger them in, take them out, and then what have a bullish movement to the upside. So you can see on that one, that breakout of support resistance zone right here, and then retracement back to it, and then this is where a lot of people would have entered this, place their order right around this zone. What happened is that they got taken out, and then what got it started moving to the upside continuously like that. So this is on that zone, but what happened is that the market did not come back to my entry level. So it's always easy to spot out when you are trading support and resistance. You just have to be patient. Now, if you want to trade this kind of market structure now, you have to be very, very patient. So me, for instance, now I just don't take this kind of trade like support and resistance. I like to see a lot of confluences. Like, okay, this one we had a breakout of this very strong resistance zone. That's one. Number two, if I plot out my fee from the low that will cause the breakout, even if I mark it from here, but I always like to use the recent low that will cause the breakout, which is this very one, and then down to this zone. You can see I would have made my entry right around this zone, but I wouldn't just enter, but I would have taken I would have taken loss on this kind of market structure. But regardless, let me just show you on that one. I would have taken my right around that zone, and then if I want to use extra confluence, I would have used like a trend line confirmation like this to break out of the trend line, and then I'll look for opportunity like a retest, or better still, I can still use my Fibonacci tool in this scenario as well. Then use the level that broke out of the trend line. This or this anyway, either way, but this is a good example of how I normally take my trade. So let me use this one again. So this is what a breakout of resistance zone, and if I plot out my trend line from here, you can see there's what a breakout of the trend line where to continue what bullish, and then this is a good place to buy from. So continuously like that. So I don't know if I'm able to understand this in the best way I can, but I just hope people understand that okay, this is where liquidity is, and then this is where an external and internal liquidity is as well. So this place, there's liquidity right here, there's liquidity right here, and there's liquidity right here, and as well in this zone continuously like that. So I don't know if I was able to explain, but this is a simple way to understand and have a proper understanding of what liquidity grab is in price action, mainly on support and resistance. Like that's my own personal way of trading, you feel me? So if you understand, or if you feel like there are something I'm missing out that you don't understand, you can comment on the comment section so I can do a video about it. So see you next week.